Thank you, Arjun. So it's my pleasure to introduce Jana Nash McCabe and Callie Dean. Listen up, both of you, please.
Hello.
Hello, thank you for having us.
Can you just share the screen, Jana, so they can
I
see your
just
information?
asked Arjun if I could be a presenter, sorry, just so that I can share my screen.
You should be able to do it right now. Can you try?
Yep, now we're good. Okay, fantastic.
Right. So they both are from Dominion Lending, Centers Integra Mortgage. It's a long name for my memory. And they both, most of you know my background. If you don't, that's okay. It doesn't help much now. But because how I'm always trying to support the newcomers and how we can help the, the worker class going in Canada or in Kamloops area, at least what I can handle. I've been talking to Jana for some time about this particular program that I have a lot of these students or former students or farmer affiliations, and they wanna buy homes, and it's difficult because they are on work permit. And then Jana finally did some work on it, and we have established, at least that's what I feel, is a decent plan. Kelly probably agrees with that word, plan, so that can help work permits holders even to get a property that they can invest on rather than paying the rent on their properties or their somebody else mortgage. But the question we have, what we can afford and how we can afford, right? And that's everybody wants to know. Everybody wants to buy $1 million home. We know it's not going to happen. So what is possibility within that framework? Both Jana and Callie going to provide us that information. Also, this session, when we end the session, it doesn't mean the conversation ends with the session. You guys can always reach Jana or Callie or myself independently, saying, because some of this is highly confidential. And those of you who know this, you need to realize that this is the largest investment you are going to make in your next little bit. 250,000, 300,000, 400,000. It's a serious amount of money that you are investing in property, basically. So it's a serious business, and a lot of it is confidential. And so without further delay, I would like to introduce again Jana and Kelly. So give her a warm welcome.
Thank you so much.
Thank you.
So today we're just going to touch on a few topics. We are going to talk about our New to Canada Insured program, our New to Canada Conventional program when it comes to mortgages. And then we're going to do a high-level overview of the mortgage financing process and what you can expect as you go through and figure out what you qualify for a mortgage, which type of property you might be interested in, and just all the details around that. And Emmett, feel free to jump in at any time. So as Emmett said, this will be probably one of your biggest investments in your lifetime, purchasing a home. So we just want to give you some information to make sure that you're ready and prepared to do that moving forward. So please keep in mind that these are just a few of the mortgage solutions we offer. If one of these two programs does not fit your specific needs, we offer many other options, and we can talk about your specific needs during a private appointment. Because it is sensitive information, and we want to make sure that we're giving you the proper information for your particular situation. So before we get into the presentation, I just want to give you an overview of how mortgages are classified here in Canada. Mortgages can be either high ratio, also referred to as an insured mortgage, or a conventional mortgage. So a high ratio mortgage is a loan for more than 80% of the value of a property. And that is where the down payment is less than 20% of the purchase price. A high ratio mortgage has to be insured against default with a mortgage loan insurance provider, such as CMHC, Sagon, which was formerly Genworth, or Canada Guarantee. You might have heard of some of those organizations in your research. This insurance is added as a fee on top of your mortgage amount, but it can be added into your total mortgage loan, and you can just include that payment with your monthly mortgage payments. So you won't even really notice the difference. The second type of mortgage is a conventional mortgage, which is a mortgage loan equal to or less than 80% of the value of the property. This is where the down payment is at least 20% of the purchase price. The conventional mortgage, these types of mortgages don't usually require mortgage loan insurance. So just as we're moving forward, I just wanted to make sure that you were aware of those two different mortgage classifications. So the first program I'm going to discuss is our New to Canada program. This is a mortgage solution specifically designed to help new residents to Canada realize their dream of home ownership. This is for newcomers with permanent and non-permanent resident status who have relocated to Canada within the last 5 years and have a limited Canadian credit history. Borrowers can also, under this program, utilize alternative sources of credit to prove creditworthiness, which we'll discuss in detail in just a couple more slides. And for this New to Canada program, you can have as little as a 5% down payment on a property. So that's super helpful if you're trying to get into the market. So under our Canada program, you can have an insured mortgage or a conventional mortgage. So again, you can have as little as 5% down or as much as you want down. This New to Canada program is designed for home purchases only, so not for refinances or anything like that, just for strictly home purchases. And like I said, you can borrow up to 95% of the value of the property, which means you only require a 5% down payment. The property types that fall under this New to Canada program are owner-occupied primary residences. So that's a really key feature of this program, is it has to be a primary residence, but you can have a basement suite for this type of property. So if you do have a basement suite, that income can also be used to help qualify you for a mortgage, which is really helpful in terms of getting you maybe a larger purchase price, things like that. So under this New to Canada program, some of the borrower qualifications are as follows. The borrower is required to have permanent residency or a valid work permit. You must also have relocated to Canada within the last 5 years, and you have to have a minimum of 3 months full-time employment here in Canada. And that would be shown through a letter of employment with recent pay stubs. I just want to touch a little bit on the relocated to Canada within the last 5 years. When we were talking to Amit a few weeks ago, he had mentioned sometimes students come over to Canada and they study for 2 years, 3 years, 4 years. So I was wondering if that cuts into that 5 years. What we have, Kelly and I have found out from doing a little bit of research and talking to some of our lenders as well as the insurers, is that typically that study time won't cut into the 5-year relocation policy that they have. So that's some positive news. If you've been studying here for 4 years and you don't quite have the down payment, it'll give you more than that 1 year left for that 5 years.
Yeah, that's awesome news, because that was one of my major concern on it. Thank you.
Yeah, so they said they're just typically pretty lenient on that. I don't know how lenient, but they said they would definitely consider taking that study time out.
Well, you know, it's all about risk management for them, right? The risk mitigations.
Absolutely.
If somebody has a really high income, they are doing well, and they might, you know, because if they could still very well qualify beyond these two programs, right? So I mean, it could very well be different for different individual. That's what I'm trying to say.
Absolutely, yes. And again, some of these qualifications could slightly change as well, depending on the particular lender and or insurer that we'll be using for your purchase. So we have multiple lenders that we work with, as well as 3 different insurers. So you can imagine how many guidelines there are there. So we definitely, if something isn't fitting for you in this presentation, reach out, let us know, because we have lots of different options to kind of look at for you. The next part is some of the required documentation that we'll need for the New to Canada program. This is just a high-level overview. of some of the things that we will require. So regardless of the loan to value, we will need a valid work permit or verification of permanent residency for any type of mortgage. We'll need income confirmation. That'll be a letter of employment, pay stubs. We usually look for T4s or notice of assessments if you're filing taxes in Canada, and then down payment confirmation. So this looks like for down payment confirmation, you'll need to have the funds in a Canadian bank account for at least 90 days. So that's something that we'll definitely want to plan for if you are purchasing in the next 3, 4, 5 months. Just getting all these pieces in place so that everything is ready to go when you're ready to purchase your property. If you have a loan to value of anywhere between 90 to 95%, so that would be a 5 to 10% down payment, then we are looking for a Canadian or international credit report. Also, rental payment history confirmed via a letter from your landlord and supported by 12 months bank statements. So super important to make sure that you're paying your rent on time and that your landlord will be able to provide you with that letter, as well as those 12 months bank statements showing you've paid the rent on time in full. And another source that we'll be looking for is at least one utility payment. So for example, it could be, we have BC Hydro here in British Columbia. It could be Fortis, which is the gas company. It could be a telephone bill or a cable bill, but something that is confirmed by a letter from the service provider or 12 months of bill statements confirming regular payments. And just making sure, again, this is super critical, is that all payments must be timely. So they must be paid in full on time every month. If you have a loan to value of 90% or less, so you would have a down payment of 10% or more, we're looking for a letter of reference from your financial institution in your country of origin confirming a minimum 6 months satisfactory banking relationship. We're also looking for 6 months verifiable bank statements from a recognized Canadian financial institution or from a financial institution from your country of origin. But important to note here that all of these letters must be in English. So one of the biggest takeaways here is that you should continually be working towards having great credit and ensuring all your payments are made in a timely fashion. This is a very crucial piece of the mortgage financing process.
Can I just say quickly here one thing, Jenna?
Absolutely.
The reason Jenna mentioned this 6 months and 90 days credit or the payment thing, because I know from my experiences and knowing myself, having followed the same path that most of you are traveling on right now, sometimes the down payments comes from your family back home. So if the down payment is coming from your family back home, that's totally acceptable. But that down payment has to be in your bank account for 90 days or 180 days for Jenna or any mortgage broker to work on your behalf, because unless it's related with, just like when you bring the tuition fees, you have to provide them invoice, then your tuition fees comes over here, because they want to prevent the fraud money, the illegal money. So from protecting from those point of view is important. So if you are hoping to get your parents to help you for your down payment, then you need to think 3 months or 6 months advance to get the payment here. Not that I'm going to look for a house now and then I'm going to have 3 months to wait for this and I'm going to get money then, because we can give you, I shouldn't say we, means the lender will hesitate to give you any approval, and you can't commit to buying the property without those things. So that's why a couple things that she's making here are extremely important, because they are more culturally and client centered in the sense. Okay, thank you.
Okay, thanks so much for elaborating on that. So the next one hold on a second. Okay, yeah. The next program I want to talk about is the New to Canada Conventional Program. So this is where you'll have a loan to value of 65% or less. So you would have to bring a down payment of 35% or more of the purchase price. So this is for clients who have immigrated to Canada within the last 60 months or 5 years. And this is for customers that cannot provide confirmation of declared income meeting standard income confirmation guidelines. And this is for customers who have not had sufficient time to build credit history. So some of the important pieces here for the New to Canada conventional program are that all down payments must be verified. This includes full documentation of the source of down payment funds and the confirmation that the funds are in Canada 30 days before funding. So this is different than the previous program that we were talking about, where you do need that 90 to 100 days for your down payment. This is where you'll have quite a large down payment. We know it's coming from a different source, and it'll have to be in Canada 30 days prior to funding. So again, just getting those pieces, planning those pieces in advance so that you do have the funds where they need to be at the time that they need to be there. We also need full documentation to the source of the funds, where it came from, as well as we need documentation for any assets that you have, bank accounts, anything like that, that shows your net worth. Gifted down payment is limited in this program to family members only. So this would be immediate family members, grandparents, parents, children, siblings, something along those lines. The property types that are eligible for under this program are owner-occupied, new construction, homes for resale, and you can also have a home with a suite. So that would be a two-unit essentially property, but one of them is owner-occupied, the other part is a rental. So some of the qualifications for borrowers in this particular program, well, one part that is very interesting for this program is the fact that income is not required. So there's no GDS or TDS test, which is standard for every other mortgage that you will get for this conventional programming, or this New to Canada program for conventional financing. You must be a resident of Canada with landed immigrant status, and we confirm this with the permanent residency card. And you can't have been here for more than 5 years. Also, if you file taxes in Canada, then we need a copy of your most recent notice of assessment or T1 general to confirm that you have no outstanding taxes. And so though income is not required for applicants on this program, we must provide evidence of the equivalent of 12 months of mortgage principal, interest, and tax payments in liquid savings in Canada. So this is in addition to you having the 35% down payment. So something to plan for, again, if you are getting some help from parents or siblings or anybody from outside of Canada, that will want to plan to make sure that you do have the right amount in your bank account in Canada, showing that. So some of the pieces of credit here for this program is we can look at using a Canadian or a US credit bureau. And for foreign applications, we'll need a copy of your foreign credit report or evidence of established credit history via 6 months of credit cards or bank statements from your country of origin that demonstrate evidence of a loan or mortgage repayment history. So again, super important to be managing your credit and making sure that you have timely payments and everything is up to date. So I'm just going to pass it over now to Kelly to talk a little bit about the mortgage financing process.
Thank you, Jenna. Excuse me. Thank you for having us meet. So as Jenna mentioned at the beginning, the earlier we start this process and really put a plan into each and everybody's situation, we're just setting you guys up for better success going forward. So again, we cannot stress enough of having this upfront conversation and putting this plan into place, because as Amita said, as Jenna has said, it is extremely important that we meet these timelines for your purchasing. So it really allows, again, excuse me, that final financing process and those next steps. So step one is getting prepared. This is again, where we're going to gather all the documents and the personal information that Jenna just went through to really talk about the documents that we have on file and present the client journey so that you have a home ownership. Again, at that time, we're gonna go through all your personal information, look at the documentation for your valid work permits and permanent residency. Again, some Canadian ID, having your proof of income for the mortgage application. And as Jenna mentioned earlier, we'll have the letter of employment and the documents to go with that income. So we'll need, again, the savings, you know, what does that look like if getting that over into Canada and having that money in savings in a Canadian institute for more than those 90 or 30 days, depending on what situation you are actually going with. And again, that proof of down payment. So really, your step 2 is getting pre-approved. Once we have all the documents gathered, we'll sit down and we will do a pre-approval. And at this time and at this meeting, we'll go through all the mortgage application and discuss the documents to help us determine and maximize the amount that you would qualify for your home buying and shopping needs. Having a pre-approval will also allow you to be extremely competitive when you are going to put in that offer with your realtor. Believe me, your realtor will love you having this all done. Correct me? At this time, we will also pull credit within the Canadian institutions. This really allows us to have that full financial snapshot of your personal situation. As Jenna has mentioned earlier, a mortgage and everybody's financial situation is absolutely tailored to each individual. And so again, if there's something that we haven't talked about or you're like, oh, this doesn't quite fit, it's really making it work for your situation. After we have a pre-approval in place, the next step is actually putting in an offer with your realtor. When you and your realtor have found a home that meet your needs, you will need to put in an offer that is accepted. And from that, Jenna and I will be able to obtain that copy and put the contract into place. We will also need an MLS listing, as well as the property disclosure, and any other type of documents that the lender could require. Now, typically, Jenna and I are going to know about 95% of the documents that are going to be required at this time. But again, these documents that we do provide up front can create some questions and just clarity of what's going on. So they could come back and ask for more documentation. Again, we do recommend that a home inspection be completed. And if an appraisal is required, Jenna or myself will order this appraiser, as the appraisal needs to be from one of the approved lenders list. Again, it's going back into just ensuring ethics of lenders and whatnot. And it's a protection for you as well. This is the time that we will have a final approval letter for you, and we will issue this in times. Step 4, at the time, this is the time where you and your realtor will be able to remove your subjects. At this point, your financing is in place, and this is on to the next step for you to purchase your home. Step 5. When you purchase a home in Canada, you're required to have a lawyer to represent and do the purchase transaction for you. So at this time, this is when we will set up the appointment with your lawyer and for your purchase. And this is where you will be able to provide all the extra funds that are needed for your down payment at the lawyer's office. And again, it's usually anything from the deposit that you've given your realtor from there down would be what would be required at the lawyer's appointment. And again, this is usually done 1 to 2 days prior to completion. Some of the other expenses that come into play when you're purchasing a home is what we call closing costs, and especially going back to those insured mortgages, we do need to require that you do have at least 1.5% more for your closing costs. So some of these costs that are to consider when you are purchasing a home is that home inspection that we just spoke about. And that could be about up to about a $500 per inspection. Again, when we're talking about the appraisal, that could be something that is out of pocket. And it's around that $450. Your lawyer fees, which again are about that $1,500. There is also the provincial land tax to consider. And this will need to be considered the first $200,000 and 2% of the remaining balance up to $2 million. Again, these were just some of the other expenses that do come into play when you are purchasing a home. When you're going from a rent into a purchase and an investment, there are extra costs that do come into play. Another thing to make note of is the tax adjustment. Depending on what time of year and how the property taxes are going to play is a change of, between that $400 and $700. Moving expenses. Who's going to carry all our boxes? As well as some home insurance. So home insurance is where you have a third party, you have insurance on your home in case there is any damage, flood, fire. As well as going through this mortgage process, we will speak to you in regards to mortgage insurance. And again, that is just an insurance to make sure that if something was to happen, your estate is covered. We cannot stress enough to plan. Have this conversation up front. We can help you with the documents, and if there's any questions of what these documents could look like, we're here to answer those questions. So the quicker we put a plan in place for you guys, the quicker you guys get to buy a home.
We just wanted to tell you guys that we have, both Kelly and I have an app called My Mortgage Toolbox that is available for download from the App Store or on Google Play. And it's got a lot of different calculators in there. It can calculate some of the costs for you, let you know about some of the current interest rates out there. Land transfer calculator, that's for in BC, the land transfer tax, which actually adds up to quite a bit on top of your purchase. So something just to look and play around with there. So here's all of our information. If you have any questions, if you want to get a plan in place, feel free to reach out to either one of us. We're here to help you. And I think that's everything that we have to provide today.
Awesome. Thanks a lot, Jana and Kelly. Don't run away. I have a couple of questions. Arjun, did you receive any question from anybody?
I have one question over here. I have noticed that sometimes friends come together and decide to buy a house. How does this program work out in that case, since they're not immediate family? Can they apply jointly? Recommendations?
Do you want to answer that, Jenna, or you want me to answer that?
You can start and I will add.
Jump in. Possible, as long as they both have similar qualifications. Both qualify, we have to qualify within the same definition, right? And there are two ways to do it: joint tenant and tenancy in common. So there are, for some of you, those words means nothing, but actually for government, that's what means a lot. So in one, if joint tenancy means if one dies, the other one takes over, and tenancy in common, the half goes to the other side. So, there are the tricks to the trade, but yes, it's possible and does help you a lot. And I know a case this year where we did that. So it is possible. You guys jump in now.
Yeah, absolutely. So it's definitely possible, like Amit said, and we'll just have to get all of your information, all the information from both of you, and it'll all be on the same application. Yeah, it's not a problem, but we will need information from everyone.
And I also know, Arjun, from my experiences, sometimes they only tell because they don't want to tell their family members that they are having fun together, right?
Exactly.
But they only want to tell you. I know you very well. That's what you are getting up to. Okay, the question, anything else do you have? Did you receive anything?
No, that's all the question I've got here.
Okay, so I'm going to bring back to the last slide here. You don't need to bring that, but Kelly said, everybody plan, plan, plan. And when this presentation was happening, today was the first day I'm hearing this presentation with all of you. So you don't get me, I had any privileged information. So it felt like to me, when I was overseas and trying to recruit everybody says, give me an offer letter so I can apply for visa and go to Canada, right? So I thought they are asking for all your documents, and they're doing the same thing. They're just asking for all your documents, so that your eligibility could be established. That means you get your offer letter, right? And once you get your visa, and then you are coming over to have fun. So very similarly, if these guys get all the documents, they establish your eligibility, and then they give you pre-approval letter, and you buy a house, and you are having fun. It's as simple as it is. Now, the another important thing to know, you can start your process now, and you buy your home after 2 years, 3 years, 5 years. That's the maximum, right, in this program.
Mm-hmm.
Correct?
Yeah.
So you may or may not be at that stage of buying. You may not be at that stage of buying right now, which is the right thing. Actually, we want you to be prepared. If you are already in this seminar, that means a lot of information. Doesn't hurt in your door, foot in the door yet. This is just getting you going, and that will also, I tell you one thing. Sometimes people say, I have all the document. It takes them a couple months to submit all the documents, right? Mm-hmm. I mean, you have seen those cases, Jana, like, we are just waiting for document because the employer is somewhere in Ontario or overseas or whatever, right? So that's the other one. Now, she brought an important point about 35% down. I don't think any of us are in that capacity right now, but that's just good to know. Yeah, study time doesn't cut into 5 years, which is great news because, as I was saying, study versus work permit, they are different status in the government system. So that's very good news for us. But one of the questions they have, like, let's say they are buying a 2-bedroom apartment. Let's say Arjun decides to buy a 2-bedroom apartment, and he has his girlfriend paying half the rent, right? And would that be considered as rental income, or that rent income has to be from the basement suite only?
It wouldn't be considered rental income. It has to be a separate suite. It has to be its own, it has to have basically its own access. It has to have a locking door between, basically a basement suite.
Yeah, okay. No, yeah. That's, well, because, under the current bylaws in Kamloops, the borders are allowed in townhomes, right? Mm-hmm. And the borders income is considered, but the townhomes have a different structure than the apartment. That's what I wanted to bring it to your attention, because if they allow borders and you have a border in your basement as like a homestay student kind of situation, they may be acceptable. not like when you have a 2-bedroom apartment and you want 1-bedroom income goes towards your income. That is a stretch, really, right? So it's an income supplement, but it's not income dependent, right? That's the difference.
So if we're needing to use income from a basement suite to help qualify for the purchase, it has to be a
Big
basement
one.
suite. It has to have its own kitchen, its own appliances, a locking door between the basement suite and the remaining part of the house if we're going to be out to use that income.
Okay, so sorry, Arjun, can you walk me through? I want to share the screen with this. Can you everybody see this screen?
I'll stop sharing mine.
Oh, sorry.
Yes.
Nope. There we go.
Can you guys see the screen now?
Yes, yes.
Yes.
Okay, so I just want to play one scenario today. Before everybody knows, I just wanted to bring you to one attention. Look at this. This is statistic. These are the live statistics. Okay. I hope I'm still logged in. So if you look on this side of the screen, you see it says history of 1 day, right? That just Kamloops market. And I'm going to change it to Jana. It's a surprise coming for you.
Okay.
Look at that. The new listings is 78. Can you see that?
Yeah.
And how much is the new sales?
232.
How much is the deficit?
There are more sales going on than listings. People, it's your time.
That's a 60 listing deficit. And you know, when we go by the statistics, that means we have 60 listings less than what we sold in last 30 days. And that's why our prices are gone up 10% in 1 month. Isn't that phenomenal? It's just a staggering statistic. I know our category people don't say that, but you know, this is how I look at it. The market is running away from us. Okay, let's quickly look at it. What I want to show everybody, just as an example of what one of the question everybody asked me. So tell me, what can I afford? All right. And that's why I say, well, you need to talk to the mortgage broker to know what can you afford. All right. I cannot give you an answer, but what the tools given to me as a realtor, I can tell you, and knowing my own experiences, what you can afford. For example, this is an apartment in Aberdeen, came out today. It's a 2-bedroom, 1 bathroom. It's a different screen that most of you are used to seeing. This is my share live. And so 2-bedroom apartment, 1 bedroom, bathroom. The total size is 1,225 square foot. Looks pretty good. Now, can I afford it? I don't know. Arjun, can you afford it? I don't know. So I have this mortgage calculator up top, and that's gonna say this is a 10% down payment, right? Everybody knows math that much. So I'm gonna change it to 250. No, too many. Okay, what's the compounding semi-annual interest rate should I use, Callie? 3%?
Sorry, what is the interest on 10% down?
Yeah.
1.89, 1.79.
Okay, so not 6%, right? That's too much.
Oh yes.
Let's say 8. Fair enough?
Yeah.
Make it 2, easy. Now it's a amortization is for 25 years. Your terms are 5 years, could be different. And I'm gonna generate this now. So now we can see this is the payment schedule.
Sorry, we can't see your calculator.
You can see?
I can't see the calculator, no.
Okay, maybe, okay, I gotta share different screens, sorry. Okay, I'm going back to my Zoom, stop share, and I'm gonna share the screen one more time, and here it is. Can we see that?
There it is.
Yep.
Yes.
Yay! Arjun, your coaching is working, man. Your coaching is working. Okay, so now if you can see that, sorry. So I'm gonna go quickly over this property is $265,000, down payment is 5%, 2% compounded interest rate, 25-year period, I generated, and what I got, a payment of $1,666 a month, right? Now, if I just go by this number, I will be wrong because I'll tell you right here, I have to stop share this one again, one more time. and share the screen one more time is right here. Can you see, everybody can see complex?
Yes.
Yeah.
Now that, how much was that? $1,066, right?
Mhm.
You got to add this number, monthly assessment fees in this. So 1,066 plus $321.69. Now, and Callie gonna say, no, you're not right. Amit, I know that. And here is the taxes. I know they are not on one screen. They all could be in one screen. I just want you to show how many factors we need to take into consideration. It is the largest investment of your life. You need to take it extremely seriously. There are professionals. That's why we take licenses out. I mean, unlike back home, we don't need any license to selling real estate. All we need is a big danda, right? For most of us. And then, you know, you do whatever you want. But here we have to follow the law. The licensees are responsible to guide you to the right directions. That's why Amit Goel is not doing everything, because we need to get the mortgage brokers on this. So they can, so now if you calculate this $1,700, that's for whole year. That's almost $150 a month, right? So you got $1,066, then $321 and another $150, and that makes it 7 to 8, and that's about $1,288. Sorry, no, 16, 4, sorry, about $1,500 a month, correct? Now you have an approximation, right? When you are in a house, lot of the fees that you are paying here, it gets broken down into different sections. If you're living in an apartment and complex, all of these fees are amalgamated. Your water fees, your sewer fees, sometimes even utilities fees are included in there. So that's just a different way to look at it. So what I'm trying to say, if you're paying $1,000 a month in rent to yourself somewhere, right? And you think you can afford a $1,600 payment, right? You better move into a 2-bedroom apartment yourself, because now I'm gonna stop share one more time, and that'd be the last thing I promised to say. Can we see that? Out of this $1,066, you paid $417 in interest, and you paid $648 towards your own principal. So the $1,600 that you paid, out of that $648 goes back to your pocket, really, because that's your principal that you borrowed from somebody. And if you're going to sell your property, you're going to get this money back. And if you look at this, this is a constantly going down scale, right? I mean, this is at the end of the 5 years. Let's say you rented for 3 years, right? You paid somebody $36,000. And if you do the math, look, that $400, sorry, what was the 400? $417 after 5 years reduces down to $315. Now you have more money going into your pocket, right? So it's an investment. This is no different than any other investments, really. But you need to decide what I can do. And then most importantly, what I find among everybody, they said, I don't have a time for this, right? If you just want to pay somebody else mortgage throughout the period, and the problem is, after some time, your landlord wants to kick you out because you're not paying them the enough rent. And that is a very true. Like, how many people go through that abuse, I call them, as a renter, through their landlords, really, right? And it's not a good situation. So you need to make up a good mind on that part and say, yes, I want to do it. And the good thing is, the risks are very minimum. You are supported by a realtor. You are supported by a mortgage broker. You are supported by if you're buying in strata, you're supported by your strata people. You're supported by your lawyer. Your lawyer is going to make sure that everything you are doing is legally right. That's why you pay them for. So what I'm trying to say, it's more about mindset and your affordability. And obviously, if you have two people do, like, if you already have, like, some examples that I know just year earlier, they both together bought a property. Now 4 of them are living in one house, right? And the both of those guys who bought the property, you know how much monthly rent they are paying? $200 each. They're people living in their room. They are paying them $800 each. Where would you find a house in $200 a month? They made a big leap of faith. They didn't believe it's possible, but it is possible. It just, we need to understand it better so we can make that difference. Okay, that's it for me. Anything you want to say? Anybody has any other questions?
Yeah, I've got a few questions here.
I'm going to stop sharing.
Questions. It's actually, last time I was in Kamloops, I was paying about $1,500 a month in rent. And you're saying I can actually afford a 2-bedroom apartment for less than that. That's wonderful. Let's see. So I have a couple of questions here.
This is
Yeah, Amit, you're saying?
No, this is
actually, I said we have hello everybody. Sorry that we just joined you a little bit late. I'm new international student here, and my husband Ali accompanied me. And now we had the same situation. We paid $1,500 per month as a rent in North Tower residency at TRU, Thompson Rivers University. And yes, regarding this actually numbers that you show us, it's amazing. So we can have our own apartments, maybe. Even
it is a lie. That listing came today. I didn't make it up. Yeah, I can assure you I did not make that one up. That is the, I mean, I actually use more interest rate. Callie was saying use 1.79. I actually use 2%. If you use 1.79, that won't even be $1,000. I can guarantee you. So this is why the level of that, like, until I did my own math, right? And that was back in 2006. I didn't know all these things. And once I start realizing, oh my gosh, like, why am I paying somebody else $1,500 when I can own my own house on that one and call it my own and never get kicked out if I don't want to, right? Mm-hmm. And to me, that's the freedom. That's the freedom I came here for. That's what I want, right? And I think if the government is wanting things, this is the new program that government is launching for the benefit of the workers and for workers who are coming to this country, right? Mm-hmm. So I think it's an opportunity for us to think differently and work for yourself. You're not working for your landlord, you're working for yourself, right? And it makes sense to me. To me, that's what makes sense.
Mm-hmm. Absolutely, absolutely.
Mm-hmm. May I ask more question? Sorry.
Please.
Actually, my husband now, he has a work permit, full-time permission, and that's why I just applied for this seminar. So what is the best option for us? As I said, I'm new international student here, and my husband has a full-time work permission.
Okay, so with a full-time work permit, he'll need 3 months minimum full-time employment. And then you'll need a letter of employment from the employer stating hourly wage, guaranteed number of hours per week, how long he's been employed there, as well as we'll need 2 current pay stubs.
Okay.
And the letter of employment also should state that he's not on probation any longer. If you're on probation, then that'll extend it a little bit longer. You'll have to be off probation. Kelly, anything to add to that?
No, not really. You know, the biggest thing is these questions and these seminars, and having, you know, the knowledge of us to be able to give it back to you guys. And absolutely, you know, we're here to answer your questions. And, you know, definitely this is a sensitive situation on everybody's side. So please feel free to reach out to us, and we can go through each and every one of your situations, because really a mortgage in Canada is so tailored to your needs. And I'm just going to touch base of the difference. In Canada, we have banks, and then we also have access to mortgage brokers. And so as a mortgage broker, our services to you guys and our advice, you don't pay us. The banks do, the lenders do. So we have access to multiple banks, multiple different lenders, and that's when we're getting into that sit down nitty gritty conversation where we get to dive in and have that more in-depth conversation of what that looks like.
I want to say, if you work with mortgage broker, there is a one big advantage. Only one credit report can go to different lenders. But if you go to different banks, everybody is going to pull your report separately. Mm-hmm. And that actually reduces your credit score considerably if you do many times. Mm-hmm. And the fact is, the mortgage brokers are not paid on monthly basis. Mm-hmm. Unlike the bank people, right? Mm-hmm. They really make sure that you get the mortgage.
Yes.
Otherwise, they are not making any money. So I'm telling you, this is...
It's true. We work for the lenders and we actually don't get paid unless the mortgage fully goes through. So any advice, any questions, anything like that, it's totally complimentary. And yeah, feel free to ask us anything, send us an email with any questions. There's so much information out there. So yeah, feel free to reach out.
Every situation is different, and I tell you why. When I go selling properties, I hardly see two houses look the same. You know, maybe my eyes start getting that way. Sometimes you have 4 or 5 homes look for you they look the same, but to me they don't, because one is on this side of the street, other one is in the middle, one is getting more shade, other one has a tree in front of it, right? You would think, why am I telling you all this? The reason I'm telling you, the same situation is in front of each one of you. Mm-hmm. You have this different, small differences can make a big difference for your mortgage. I'm so fortunate that I was in Kamloops before, my background in there. And I had this, when I sold some units here in Sahali out of 13 units, we sold 9 so far. Out of 9, we have 4 of those are former TRU alumni, right? And I call them my students always. And it's such a happy place to be because I know they are achieving greater heights, right? They are paying their own mortgage. And the amount of acceleration and appreciation they receive from their family back home. Well, if you're already married and have girlfriend and spouse, well, sure, it's not going to boost your chances. But if you're not, you know how much it boosts the chances? Man, that's phenomenal. And I think, in our culture, we say, roti kapda aur makan means, you need your bread and your clothes and your house. Mm-hmm. All the parents in the world, all your family back home, they want you to buy the home because that's the ultimate prize that you are responsible for, right? And I have shown you, these guys are committing to you. It's going to work for you, but you need to be as willing to work for us, right? You need to be committed in the same process, because as a professional, when we give you some advice, we want you to understand why we are telling you this, right? It's not that we are just telling you for the sake of telling. It doesn't help anybody. Go ahead. Any other question you have, Arjun?
I got a few questions online. So Galaxy A82018, I don't have their name, but they've got 2 questions. 1, are you considered a resident or non-resident if you're on work permit? 2, about calculation of the income, will it be considered on the basis of your current notice of assessment or current pay stubs?
Okay, so for the income one, it depends how they're employed. So if they're employed full-time, then we're going to be looking for a current letter of employment with 2 recent pay stubs. If they are part-time or contract or some sort of irregular type of work, then we're going to be looking for a 2-year history. So that, again, is where it's really important. Let's get together. Let's plan. What does this look like? What are we going to need for that irregular income especially? We do need a 2-year average, so that we'll be looking at T4s, notices of assessment. We'll still need pay stubs, but it is a little bit more we look a little bit more into it and we need a little bit more information. So it just depends, yeah, if you're full-time, part-time, irregular, salary, commission, yeah, it just depends really. So I know that's probably not the answer you're looking for, but it'll be dependent on the type of employment that you have and your current situation. So again, another reason to reach out.
Okay, thank you so much. This is actually my question.
Hi.
Oh, fantastic. Okay. Yeah,
So
reach out if you want to talk a little bit more about your situation and what, where you're working, what kind of hours you're working, if it's guaranteed, things like that.
Okay, so I have one more question apart from that. Like, do the like work permit holder do need to pay like extra percentage of tax while they are buying for a home?
No.
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 Like, and is work permit holder considered as a resident of Canada or like non-resident of Canada? Like,
Okay, I'm going to tell you for this particular program, they are considered resident of Canada. Okay, because they are not foreign buyers. You are confused with the foreign buyers status. When you are when you are in working permit in Canada, you are considered resident of Canada if you have spent more than 210 days in that calendar year.
okay.
That's the immigration rule, you know that, right? Other than that, you are a part-time resident. So this particular program is different. Now, this program also has some cap limitation, how much you can buy for, right? You're not going to be able to buy $1 million. Your income is not going to support, your down payment is not going to support. So talking about Vancouver market and Surrey market, those may not work out, right? But the smaller market, this works out. And I think most of the newcomers are going to the smaller market areas, right? So because that's where the needs are. So another question, Arjun, please.
Yes, next question from Avneet. Hello, approximately how much should be the income to be qualified for a 350 to 400K mortgage?
So I just did a rough calculation and this does not include any liabilities. So we'll be also including liabilities when we do a full application. But without liabilities, it's about $81,500. So you'll probably need a little bit more than that. That's just based on one person. So if you had a dual income household, then it would be approximately $42,000 each, if that helps in annual income. We will be looking, though, when we pull your credit bureau, we'll be looking into liabilities, and those do factor into how much annual income you require and how much you can qualify for.
And the other thing too, and I'll just touch base on that, is, you know, there used to be a calculation that it was like 33% of your income and that's what you would qualify for. In Canada, back in 2016, our federal government made a ton of changes in regards to mortgage rules and how we actually qualify. So when we say we have X amount of money in income, can we actually put it towards the $350, $400 purchase price? But then maybe there's a little bit of income within the taxes. And then that's where it's having these conversations with Jenna or myself of where can we gather all this income for your purchase. So it's, again, having that in-depth conversation, planning ahead, ensuring we have everything going in that direction for you to purchase that house. So if it is a $400,000 home you're looking at, what does that look like? And just because one spouse may make X amount or vice versa. So it's, again, having a conversation with us. What does your situation look like? And again, those mortgage apps that Jenna and I both have will really help you with those calculations as well.
Another thing to consider, just if you're looking for a higher purchase price, is considering homes with basement suites. We can take that income, we can use that as qualifying income to get you that higher purchase price. So just some different options. You don't have to just be looking at 1 or 2 bedroom apartments. We have other options as well for using income to qualify.
Okay, I know, Arjun, we got a couple more questions, but time is sensitive.
Time's running out.
7:35. I have a 7:45 showing.
Okay.
So first of all, I want to thank you both, Jana and Callie, for providing us valuable information, and all the attendees, because it is for you, not for me. It is really that we want to benefit you. Our benefits will be smaller, maybe 5,000, 10,000, but your benefits will be in hundreds of thousands of dollars, right? And I couldn't put it better than this, because we want you to be successful. Then only this business continues, right? For me personally, and for Jana and Callie, because more people successful, then we can make a little bit money. We are not making more money than you, right? So think about from those point of view that how can you help your own cause? Because it's very easy to pay somebody else rent. And owning and maintaining his property is like buying an elephant. But I tell you, but if you have an elephant, you don't need to worry about any other animal, right? And it's mighty powerful, and it gives you social uplifting. You know, we talk about social enterprise. It's socially uplifting, morally uplifting, and you feel you are here. You're not worried about your tenant and landlord. First of the month, you have to pay the rent and all sorts of things. Yes, you have to pay, but the system allows you to succeed so much better. And so last thing I want to say, thank you, Arjun, for making it happen for us. Without your IT expertise, I know I did well with your coaching today. So thank you.
I just want to answer one more question. There's something about provincial factor and if we have jurisdictions. Kelly and I don't have jurisdictions. We can do mortgages across Canada. But I'm not sure about yours.
No, I'm limited.
Okay, so we're all unlimited. Yeah, so we're all across Canada. So yeah, feel free to reach out. Our lenders that we work with work all across Canada as well. It's not just particular in Kamloops or BC. We're all across Canada.
All right. I know a lot of you have more questions coming in, but I'll send you an email with their Kelly's, Jenna's, and Amit's contact information. You can reach out to them, and you guys can proceed or arrange one-on-one sessions after this. All right.
Okay. Thank you so much.
Thank you so much, everyone.
Thank you so much. I really appreciate
here. Thank you, and all the best. Let us know.
Thank you. Sure.
Thank you.
Bye.
Thanks, Jenna and Kelly. Bye-bye.